How's it going, everyone? It's Sam. I'm really excited because I did some more research on one of the oil tanker stocks, and the big problem with a lot of them right now is that they've just ballooned in price over the last few months because everyone's buying them. There's big demand for the stock right now, so people are really willing to pay a lot of money for what it is compared to how much they used to pay, especially with NAT. But I found an oil tanker stock that's actually pretty well known, that's poised to have a really good couple quarters, maybe even into 2021, and they're actually down 50% on the year. And I actually bought some of them just this morning. And if you've watched any of my past videos, I'm taking pretty small positions in this. Yeah, I'm saving up for a house. I'm also saving up because I'm going to get my MBA. So I'm not putting as much money in these investments as I'd like. But I wanted to bring it to you just in case you want to do your own research and maybe buy some of the stock too. So before we start, a little bit of housekeeping. I appreciate all you guys that are joining the channel. I am investing $5 more for every new subscriber. So the last time I did that was actually, I think, last Thursday or last Wednesday. And at that point, I was at 248 subscribers. And I have gained a lot since then. I invested $100 today, so that'll bring me up to 268. I'm going to do a video in the next few days about buying more stocks and what I'm buying in the market, so definitely subscribe if you want to see that. And please leave a like on this video because it really does help out the channel. So the stock that I'm looking at today is Scorpio Tankers Inc. So in case you haven't heard of it, its ticker symbol is STNG. And if you look here on their chart, they were up to about $40, almost $40, and now they're below 17. So they were down to about 13 and then rebounded a little bit. But I'm going to go through why they've dropped so much, what to look for going forward, and why I think it's a really good value. And I covered a little bit of this on my video yesterday, but I want to dive into it more. I was looking at these different tanker stocks, and this article caught my eye. So Scorpio Tankers announces purchase of common shares by Scorpio Services Holding Limited. So this is one of their companies, it looks like. And just a few days ago, actually right around a week ago, they announced that they're going to buy 100,000 more common shares, which for them, that's not too expensive. That's a little under $2 million, but still, I think it's a really good sign. So I had heard of STNG, and I knew that they had a really good price to earnings ratio. So I want to take a deeper look, and I looked up an article, and I want to go through this article that I found because I think it makes a lot of really good bullish points for STNG, and then we'll look at just their stock analysis afterwards. So starting off in the summary, it says STNG is currently trading more than 50% under its net asset value and is currently deleveraging to create even more NAV by Q2 and Q3. So if you don't know what NAV is, it's essentially all the assets minus all the liabilities divided by the number of shares. So essentially it's if they took all their assets, they sold them off for market value, paid back their liabilities, then that number is divided by the shares to tell you the amount of cash per share that they would have. So essentially if you can get below 1, that's really good. Think of it as you buy a company that has $20,000 worth of equipment, maybe they have $10,000 worth of liabilities, and you bought it for $5,000. So you could sell the $20,000, pay back the $10,000, and then you would have $10,000 left even though you only bought it for $5,000. And that's essentially what STNG is right now. It's under 50% of its NAV. So as we go down through here, you can see the tanker market index on here, and it shows the single voyage rates for these different kinds of tankers. And as you can see, from 2019 to 2020, they've increased dramatically. And these are just averages. So as you can see, they've about 4x'd on a lot of these, 3x'd, 3x, 3x, 2.5x, etc. So the index is up huge this year, about 3.5 times what it was last year. So they're able to charge a lot more. And as you can see here from the quote with the president of Scorpio Tankers, if an MR, so this tanker here, if they can get $30,000 on a spot voyage, so over 2 months, it covers its cost for an entire year. If an LR2 gets $150,000 or $160,000 per day, it's the same. You can lay the ship up, earn zero for the next 10 months, and you make a profit on the ship. So, I mean, that's a really good scenario here that over March and April, they had these large rates, huge rates, and they're still going to do business throughout the rest of the year. I think that they'll still do better than they did last year. They're still going to earn more because we have all this supply of oil now, and we can't just use it in a few days, a few weeks. It's going to take a long time. And these oil refineries and different places are still pushing out oil all the time. They can't cap these refineries and the wells because it costs so much to do that or to slow production. So they're just going to continue just at a lower level. So as we are still low on oil demand, we are going to use a little bit more, but they're still going to pump more oil into the system. So I think these different tankers are still going to have a big spot in our economy, and they're going to serve a real role here for a while. So as you can see here from the Scorpio Tankers commercial director, in their Q1 earnings, he was saying they concluded an LR2 spot voyage on a normal trade lane for almost 40 days at 178,000 per day. So that's just an insane amount. Back in the chart, it says that last year it averaged 19,000 per day. So they're getting 9 times that in this spot voyage. So that's an insane amount. That's just huge. That's blowing away everyone's expectations. And I think that just shows how much earning potential they have this year. So they also talk about in here that a lot of their advantage comes from the fact that they use clean product tankers. So if you don't know, there is crude oil and there's refined oil. Crude is literally what you take out of the ground. It's really messy. There are chemicals in it. And refined oil is kind of what they do to make it more usable, and it's a lot cleaner. And Scorpio has invested a lot into the equipment to carry this, so they can charge a lot higher rates. As you can see here, they have the fundamentals and the last quarter profits and revenue, but we're going to go through that later. I do want to say here that they made $254 million, which is a fourth of the market cap of the company. They made that in revenue just in the first quarter. So, I mean, that's an insane amount. Of course, they didn't take that all in as net profit, but that's likely to go up for the second quarter because a lot of the high demand and the high spot prices didn't come into effect until April. So that's just one thing to consider here. So I did mention earlier that they are trading at less than 50% NAV, or about 50% NAV, and they are using some of their free cash flow to pay back debt. So one of the reasons that STNG has gone down in price is they've expanded a lot and added a ton of debt to their balance sheet. So as you can see here, they show the fleet sizes of the major players in the oil tanker business. NAT is here. They have 23 vessels. Let's see. DHT has 27. Some of these others have 76, 64. STNG has 137. So that is massive. That is almost 3 DHTs and 3 NATs combined to make STNG. And that's just a massive amount to invest in your company. So, it does make them a little bit riskier if the demand goes down, but they hold a large market share of this whole business. So they mention in here too that it takes a really long time for someone to build tankers. So if you're thinking, well, one of these companies can just build some tankers and then take advantage, no, it takes 18 to 24 months to make a tanker. So I don't imagine too many of these companies are going to do that. There weren't that many tankers added last year either. So it's really hard to get into the space. That's one thing to look at when you're looking at investing in something. Is it hard to get into the space? Is it hard to make money? Kind of like airlines, there's a big barrier to entry. But this is something that is doing really well right now, and will just continue through this year. As you can see, they had already announced share buybacks through the company, but as you can see here, the president of the company announced that he was going to buy some call options. So he's going to buy the opportunity to buy shares at a low price because he thinks that the stock's going to go up a lot. So that's really significant. As you can see here, the contracts cost him about $6.23 per contract. So he spent almost $2 million on these options. And at $6.23, he bought the call options for about $15. So he's expecting it to get over $21 and 23 cents by January 2021. So, I mean, in the next 7 or 8 months, he's expecting the price to go up significantly, and he's willing to bet $2 million on it. So I think that's really something significant to think about too. And with all this leverage and their large tanker fleet, the question comes, well, is it really risky to invest in them? Do they have a lot of debt coming up? And as you can see here, they refinanced some of their debt. So they pushed out a lot of the debt to a later date. So instead of Q3 2020 paying $165 million, they're paying $70.5. Instead of paying $232 million in Q1 next year, they're paying $106. So they're pushing it out. So, overall it might cost a little bit more, but it's definitely worth it because it makes them a lot safer going forward to invest in. So that's why I want to bring up here. I do want to look at their fundamentals real quick. So as you can see, their PE ratio is right around 2. So their forward PE ratio is 2. They were at 39, like I said before. They're at 17 now. If we look at a longer time span here, they haven't been this price in a long time. So unlike these other companies that were trading 30% of what they are now, like NAT was under $2, now it's $5. STNG really has not been cheaper than this in a long time. So 2018, you can see it was at $16.20, but that's about as low as it goes. And it was much higher. It's 115, 110 here. And they're at 17 today. I mean, if they ever got to this price, it'd be a 10x. So I do want to say that going forward, that there's a lot of possibility here. Of course, I don't think they're going to get to 110, but I could definitely see them get back to 35 after some really good earnings this year and paying back some of that debt to make it so that they have a lot higher earnings per share. And as you can see here, their book value per share is about $37. So that's a really good sign going forward. It's a value play that they have here. If you look over their dividends, I'm not sure they're going to really be a big dividend payer like DHT or NAT, just because they have that large amount of debt. And if you look at just their dividend scorecard here, they've been paying about 40 cents annually, and they haven't been growing this because they've been paying down their debt. As you can see here, they used to pay $1.25. So, I mean, maybe they bump it up and pay a really significant amount. That'd be a dividend yield of about 24% here over a year. So I don't know if I'll see that happening, but they're paying 10 cents here, so it still gives you a little bit of a dividend yield, about 2.3%. But it's really a value play that I could see going up 2 times, and that is why I actually invested in my Roth IRA. So with my other tanker stocks, I had been investing in Robinhood, but with this one, I might sell this one before I sell NAT and DHT. I think it's a good value and I want to see it go up, but if I sell it for 2 times what it's worth now and I sell it in the next year, if I can just get that tax-free, I'd rather have that. So let me know what you guys think about STNG in the comments below. Let me know if you've been investing in it. I appreciate everyone that has reached out and told me about it in the past. I had researched it a little bit, but when I buy certain stocks, I don't like to just go and buy every stock that's similar to it, and I don't want to spend too much in the sector. So I want to kind of dip my toes in the water, get a little bit more comfortable, learn more, and invest a little bit more each week or 2. So that's why I've slowly gotten into this one, and it turned out there was a good thing that I didn't get into a little while ago, because it's dropped down just over the last couple weeks, even since they've had earnings and different things come out. So I did want to just let you guys know on this. I do plan on doing a little bit less of these tanker stock videos in the future. I've been doing a lot recently, but I just think that there's a lot to cover. I am going to invest a lot more soon, like I said, so definitely be on the lookout for that. Subscribe if you haven't subscribed for that. And I just appreciate you guys. Thank you guys for watching, and I will see you in the next video. Bye.